What is going on? So in this video, I am actually going to be showing you how you can literally grow your $50 Forex account and build that $50 to maybe 1,000, 2,000, 5,000, 10,000. And I am going to give you a step-by-step guide from showing you how much you should risk to what actual pairs you should trade, and then showing you the methodology of what you should use to get in these type of trades so you can become profitable. So if you have a $50 account and you want to grow a $50 account to that 1K, 2K and above, do not skip past anything, because from here and now it's going to be fire gems. And of course, guys, if you aren't already, do me one huge favor. Please subscribe to this YouTube channel, as it helps my YouTube grow, and make sure you share and like and comment down below so we can go ahead and continue to show the world everything. So let's go ahead and get straight to it.
I got big visions for that plan. This is me and you. Never change. Too much change.
Okay, so first and foremost, before I talk over the risk management and everything like that, I want you guys to know that there's going to be actual 3 pairs that we're just going to focus on for us to build this $50 account. So the very first pair we're going to actually focus on is going to be GBP USD. After you have GBP USD, the next one would be GBP Yen, and then the last one can either be between whatever you guys want to choose from, but it can either be AUD USD or any other major pairs like GBP Yen, USD CAD, GBP CAD. It can be any of those major pairs. So what we're not going to focus on right now until we get the account to at least $500. Once we get the account to $500, the other pairs that you guys can add on, or the other commodities in the index you can add on, would be S&P 500 if you want to, and gold. Other than that, do not trade anything else, otherwise you guys will over leverage your account. Just gonna tell you right now, you're gonna over leverage your account and you might just lose out on that $50 to get that to 1K to 2K, whatever your limit is. So let's go ahead and get now to the compounding side and the risk management side. Okay, so here is this sheet, compounding sheet, that actually helps you kind of figure everything out as you are trading. So what I actually went ahead and did was pretty much gave you guys an overall view. Of course, now this is if day, meaning like you're never going to lose, but once again, that's impossible. So how I am going to show you guys how this works is going to be a little different. So right now we have $50 in our Forex account, and we want to at least do a 4% gain per day, per trading day at least. Now what I mean by that is whatever our current balance is, we want to at least gain 4% per day now, or per trading day. Now with that being said, let's say that we have a $50 account and our first trading day, the first day we take our initial trade, we want to do 4%. Guys, 4% of a $50 account is $2. So when you guys hear that dollar sign, $2, I know a lot of you guys can easily manage $2, but usually when people do that, they are already over leveraging their account. We're going to do it the proper way. So with that being said, when we get into this calculator right here, by the way, the link will be down below. This is a new calculator that I'm using. I love this. It has everything we need. So let's say that we have a $50 account, and then our account leverage is set at 500. You can change your leverage. If you guys have 50 leverage, 100 leverage, 200, 300, 400, 500, you can change it. That's why I really like this calculator. But we have 500 leverage, and then we're only, guys, listen, going to risk 1% of our initial account. So that 1% is going to sit at 0.5 as far as how much we will risk if the trade goes out of our favor. Now once we have that, you guys can select the asset class. You can do cryptos, energy, shares, index, metal, US shares. Literally, they have everything here for you. We're going to focus on Forex right now because our account is so small. We want to make sure we're properly doing this right, so we're going to stay on Forex. So I already went ahead and chosen my instrument, which is GBP USD. The entry price is set at 1.35933. So if we come over here and go to GBP USD, I kind of just did an entry right here and say basically, all right, our entry point is here. We're looking to take TP all the way down here, which is our TP area, which is based off of this area of structure here. So let me move this a little bit there. So now once we created that, guys, what I am going to do is just copy pretty much all of my entry points from my profit and then my stop loss. So let's go ahead and do stop loss, copy that, come over here. We're going to paste that there. It's going to tell you how many pips it is, which is 14 pips. And then from there, we're going to come back and then we're going to do the entry point. Let's just do our entry point. We're going to have to change that. Our entry point is actually here. So that actually changes everything. So we got to come back, re-enter. Okay, so now I have re-entered everything. It's basically telling me our stop loss is 10 pips out, and then our potential profit is 109 pips. Now that's a beautiful risk to reward trade right there, which is I'm gonna be showing you guys strategies that you can use, really just methods, different confirmations you can use to get that type of RR. So once we now have everything integrated in or locked in, put in the actual calculator, what we're going to do is say short. This is what we're doing. We're shorting this position, and then we're going to hit calculate the position. Now it looks like the position, it looks like you cannot take this position with your account. So here you guys have it. So that being said, now I'm over here trying to figure out what I need to do to actually make this money. But now it's telling me, oh, I cannot enter because of my account size is too small. So when stuff like that happens, guys, unfortunately, we will have to move on and see what other entries and points like that. Let me come back and give you guys a better rundown on how to actually calculate this. Okay, guys, so here we have it. I had to switch things around, but pretty much how it works is, guys, once you actually have a proper entry to a proper stop loss, it's going to actually give you a calculation. Now, if you don't, it's going to tell you you just can't trade this account with your account size. And I'm gonna be honest with you guys, that's something you should not do, because it's telling you that the risk is already going to over leverage it. So you just want to make sure you're on point with everything. But once again, with $50, we are already at bare minimum. So you guys got to really focus if you have a $50 account, because I know there's people out there that only have $50, or you might have blown your account and you probably around that $50 point and you want to grow that account back. So here we have it. So the lot size you guys should be doing with the $50 account. Now you guys can play around with this, of course, but I'm just giving you how it works. It's going to tell you that you need to do a lot size, a micro lot size of 0.01. It also gives you the risk to reward ratio, which is about 26%. So if this trade goes in your favor, really, if this trade goes in your favor, you're definitely going to be in the money for sure. But most importantly, guys, what it's really showing you is everything you need to know. From the TP, if you hit TP, you make $13. It's telling you $13.23 is going to be in your favor. And then your stop loss, you're going to lose, of course, 50 cents. So if now, let's say we did take this trade. Now let's go back to our compounding sheet. That $13 is actually, let's see what percentage we're looking at. 26%, like what I mentioned earlier. That's at 26%. So if we did this type of trade, which I'm gonna be showing you guys how to hold these type of trades, because it's possible, that 4%, now you can keep going, because we're at this point, once that trade goes in your favor, you can move your stop loss to profit and just keep riding the trade on and on and on and on. And then if you get to that point where now you're trying to do 26% almost essentially per day, per trading day, look where you can get your account to within just 30 days of trading, and that's 50K. Now I know that sounds very monogamous, but it is possible, because at the end of the day, I know a lot of you guys seeing a lot of these crazy flips on YouTube. Even the flip I did, 1,300 to 40K in just 3 days. So it's possible, but you just have to be smart and skilled about what you're doing. Really just make sure you're smart and know what you're doing. That's really what it comes down to. That's a skill trader. That's how we look at things, and keep going from there. So now that you guys understand what risk management you should be doing, I say don't not risk no more than 1% per your account. You can go up to 2% risk, just don't risk no more than 2% for sure. Now let's get into the bread and butter of what you guys need to be looking for to grow this account quick, because we're only going to be looking at just really one thing. All right, so let's talk about the concept of how you guys need to look at market moving forth, growing pretty much any account. So first and foremost, we need to understand structure before we understand everything else. So when market is shooting down, we call this lower lows, and then we call it lower highs. Now, once we start seeing price shooting down, but then we start to see something shifting, that's where we start to see this format of price action patterns known as double bottoms, double tops, inverted head and shoulders, triple bottoms, triple tops. When I start to see that shift, then I immediately start to say, all right, we might either have something forming also, which would be like a falling wedge, rising wedge, in this instance a falling wedge, some diagonal pattern, a reversal pattern, some sort. But we're not going to, that's not going to pay, we're not going to really pay attention to that. What I wanted you guys to understand is structure. So when we already have resistance here, let's say we already have our resistance line here, when we notice that shift in the market, what's going to happen is price is going to shift and break out of that structure. So when market breaks out of this structure, that first breakout that you see, we're going to wait. We're going to wait to see what price is going to do next. We're going to see if price is either going to come down and try not to break this. How we will determine that is based off of candles momentum and price action momentum. So if we come back down, let's say price, because price can do a lot of different things, but let's say price comes down, shoots here, and then now we have a double, triple bottom essentially. What we're going to see is price creating another mini position called a double bottom. So once we get that, then guess what? Now we can look for this buying setup to take these buys. So now the question comes down to, all right, once price breaks and creates new structure, meaning a new high, we're going to use something called the Fibonacci Retracement. I do use the extension, but I know that's going to overcomplicate people. So we're going to use the Fibonacci Retracement to figure out the first TP. So now what we're going to do is just draw that Fibonacci Retracement from A, which is the very bottom before that breakout, and then to B. So that being said, when we are trying to enter in the market, I'm gonna give you guys two ways to enter in the market as an aggressive trader and a normal trader. First and foremost, we're on a 4-hour time frame. Let's just say we're on a 1 hour. Actually, let's just do 1 hour time frame. This is the 1 hour time frame. Our TP that we're looking to for everything to hit is literally going to be this move right here. This is really what we're looking for before we take the trade. Now, as an aggressive trader, your aggressive move is going to be pretty much a move right here. This is going to be your entry as an aggressive trader. Now, as a normal trader, yours is going to be a little different. All right, so now on the, let's say 1 hour time frame, your entry is here. Once we get the candlestick pattern, which can be engulfing candles, if you look previous candles and you see multiple wicks, next candle is more momentum, you can also use that as a candlestick pattern. And then respecting structure, meaning that it's not breaking previous structure. You won't really know that until you see the momentum of price. And then the final is price action pattern, which all goes hand in hand together of everything. So that is your aggressive entry. So you guys, if you guys want to take that entry, then now what you're going to do is long position is going to be literally roughly right around there. Your stop loss is going to be super small, and then your TP is going to be extremely large, and you're looking at a 14 RR, which is basically, let's say, about a 14% essentially with this growth. So this is literally all you're going to be doing. Now this applies on a 5 minute, 15 minute, 1 hour. I highly suggest just staying on a 1 hour because you have more data to collect, and the probability is going to be a lot better. But once again, guys, if you take these trades on a 5 minute, it's still beneficial. You just don't catch as many pips as you will on a 1 hour. That's why I recommend a 1 hour time frame. Just stay on a 1 hour time frame, 30 minute, all of that, just to go ahead and enter and all. So once you guys get this set up, just expect price to hit that -618, because at the end of the day, what's happening is it's creating its first impulsive wave, which goes into what I teach, Elliott wave. So if you guys want more information on Elliott wave and everything on strategizing, stuff like that, you can check out the links down below. Otherwise, guys, subscribe to my YouTube channel. I always show you guys support regardless. Other than that, guys, I appreciate the love. Make sure you check out the broker that I use. If you guys want a funded account, you do get 20% off by using capital S Solo 20. Get 20% off when you guys decide to sign up for a funded account all the way up to 100K. So make sure you use that code down below, and I will see you guys in my next video. Once again, peace and love. Your boy Solo. I'm out.
I've been out here feeling me on a regular, fucking with this dream, preparation. You don't like I'm on that same shit, let me elevate you. Working through that patience, termination. This is how it is, tell me now. You really with it, then I'm feeling I've been out of line. Man, I cannot catch me out my temp, been a lot of high. And if you fucking with me, then you ain't never lied.